A very good afternoon. You're right here with us on News 9 Live. I'm Kartik, Malhotra, and what a day this has been for the markets, just as expected. Almost 36 hours or so after the exit polls have all unanimously declared a thumping victory for the BJP-led NDA government to come back in power for the third term. Markets are up 3%. Let's make sense of what you as an investor or as a trader should do in a situation like this. Remember, volatility is also high. This morning, India VIX was at about 20 plus. And this all pretty much ascertains that markets are likely to remain choppy. And this, while markets are on an upswing, Nifty and Sensex both up about 3%, 3.11% right now on your screen. India VIX has reduced to about 18.68. What does this mean for you as an investor, as a trader? And are these numbers as expected? And will markets continue climbing, or are we going to see some sell-off both today as well as the counting day tomorrow? Joining me to discuss with me in the studio is my colleague Suyash Maheshwari. We are also joined by Andrew Holland, CEO Avendus Capital. Very shortly, Kranthi Bhatini, Director Equity Strategy, Wealthmills, will also be joining us. Suyash, first to you, good afternoon. As expected, markets are up about 3%, pretty much on expected lines. What is it that you are reading into the data?
I think the markets have actually done better than what we were expecting. Remember yesterday when we were talking here on News 9, there was an expectation that we will see a gap of opening of about 500 odd points. But today, it was a historic day, a 800 point gap up opening for Nifty. The markets typically on a day like this, when there is a gap up opening, you would see or witness some profit booking as the days goes by. But that has not been the case today. And it's not just, your headliners that are making record high levels. The mid-cap index, the small-cap index, Nifty Bank for that matter, is up 4%. It's above 50,000 mark for the very first time, making its way towards 51,000 level as we speak. The market is not giving up the gains. And two, that, it is beyond what we were expecting. And, another thing that you also mentioned, India VIX, we saw throughout the last one month and a half during the, the polling phase that India VIX almost, jumped about 160% from a 10 odd level to about 26, which is a 52-week high. Today, we saw about a 20% decline in India VIX. It's back around that 20 odd mark, which it was
18.68 right now as you're looking at the data.
18.68% decline.
The
figure stands at about 20 odd percent.
Right.
So, I mean, I think, the jitteriness, at least the exit polls, that came out on Saturday, and it looks like, at least the exit polls suggest that it could be a sweeping victory for PM Modi-led NDA government this time around. Most of the exit polls are suggesting the tally to be around the 350 mark. Some are even suggesting a 400 plus final tally for the NDA government. I think the market is taking it with both hands, and the color of the day is certainly green, and as it shows on my jacket.
Absolutely. I think the perfect color to choose for your jacket today. Andrew Holland, good afternoon. Thank you for making time on this very, very special day where obviously, this was not something which was unexpected, but already a 3% rally. We are just about 3 hours into trading this morning. How do you see Indian markets perform from here?
You say it wasn't, it was expected, but interestingly, the week before the exit polls came out, the market was down 2%. So there were some jitters still around, and obviously we saw a lot of, short sales by foreign investors, to cover tail risk, which is fine. So, my view is this, is that, anyway, you have to make up that 2% you lost last week in terms of whatever jitters there were. And then, I think anywhere between, 3 to 5% today is probably where we're going to end up. And, I've been seeing some brokers reports now highlighting that, whilst the exit polls are great in terms of direction, previously, they've always been a little lower than the reality. So for short-term investors, there's no need to be rushing to the exits because, there's a lot of short covering to come through. And for longer-term investors, what's changed? I mean, what's changed is that you're going to have if the exit polls are obviously correct, you're going to have a continuation of the policies that have been propelling the GDP growth of India, right. and that's not going to change. So, there's no need to kind of rush to sell anything.
So what are you attributing this rise today to? How much of this, Andrew, are you attributing to the exit polls and how much to the macroeconomic data coming by way of GDP numbers pretty strong at 8.2% for the year gone by?
Yeah, I know all the stars have been aligned, haven't they, in terms of GDP, GST figures, global factors, possible, kind of truce in Gaza. All of these factors are helping global markets as well as ours. So I would say that the main factor is obviously the policy continuation is what we're expecting. Therefore, that uncertainty has been taken out of the market. Markets don't like uncertainty, and that's why you've seen the VIX fall, and I expect it to fall a lot more from where we are today as we get back to kind of normal trading and start to look forward to what's the policies going to be, what's the 100-day plan, and then of course the budget in July at some point.
All right. Hi, Andrew, Suyash here. This morning, and I'm sure Kartik's phone was pinging all the time, and people just have one question. After a gap up opening like this, after a strong, initial surge in the market, what do you do? Do you buy or you sell? I mean, I cover markets, but I told them at 12 noon, Andrew Holland is going to join us. So I'm taking that question to you, sir. What does one do today? Buy or sell?
So let me take it two different ways. Let me talk for the investors who are doing their SIPs, their normal mutual funds. You're going to continue doing that. It's paid out well for you, and you'll continue to do that. If it's a more shorter term horizon, then I still think the market's underplaying that the event is, if the exit polls are right, was a little jittery all the way through. So I think we're going to, I think we'll probably end up this week anywhere, minimum 5% up from where we are, but from the beginning of today, and maybe towards 10% as well, because I think I think the market's going to like what they've seen, and I think the other point, which is very important, is that the banking sector, which has been unloved for so long, is really one of the big ways to play the economy. And that's been sold by FIIs, it's been shorted by FIIs, and it's underweight in a lot of portfolios. So I think banking sector will be the biggest mover driving the index.
All right, banking sector will be the biggest mover driving the Sensex. Coming the word from Andrew Holland. Andrew, stay with us. We are also now joined, I'm told, by Kranthi Bhatini. Hi, Kranthi. Good afternoon. Thank you for joining us. I believe you're traveling, but thank you for taking time. I want to understand from you what is coming into the market today. Is it FII money? Is it DIIs? Is it retail investors? Who is the most bullish on the Indian market at this moment?
Hi. It's been a combination. It's both the DIS have been, we can see the whole lot of exuberance coming from the foreign portfolio investors who are on sideways in the couple of months back, and also the domestic institutional investors who have been the net buyers throughout the last couple of months' time. One thing is, yes, market doesn't like the uncertainty. Now the uncertainty is over and there will be a policy continuity. Now what we are going to see is how the Modi's cabinet going to be, his team. There will be any changes in the team, in the finance minute, in the top deck in the North Block, and the 100-day agenda, as Andrew rightly mentioned, how it's going to be. These are the things markets are going to be. As markets are always the forward-looking animals, they're trying to discount the future growth as the stars are, everything is aligned in the right direction for the market. This is the time truly for the Indian markets and India. That's what I can sense. Stay invested, and the strategy for the investors at this point of time is there might be in the portfolio, knowingly, unknowingly, some low quality stocks that creep into the portfolios. This is the best time to flush out those low quality stocks in the portfolio. This is the best time whenever there is a exuberance, the best time to throw the low quality stocks from the portfolio.
Okay.
All right, and apart from all the factors that you and Kranthi stated, that is perhaps driving the market, and I think one crucial factor is also short covering that we are seeing play out in the futures market. Just a couple of days ago, actually about on Thursday, FIIs and DIIs in the futures market were sitting on extreme ends. You know,
Right.
they were short, the FIIs were short about 2 lakh contracts and DIIs were long 2 lakh
That's
contracts or so. And whenever we, you know, get to a situation of such extremities, it always tends to favor your local investors. And I think we are also seeing some bit of short covering happening. But Kranthi, I mean, of course, you know, the biggest factor of them all that is driving the markets is perhaps exit polls, sir. But how much weightage do you actually give to exit polls? Because you see, in a country where about 60 crore people vote, only 8 to 10 lakh people are, you know, surveyed in these exit polls. For the statisticians out there, that is a percentage of about 0.015%. I think statisticians won't be happy with that test pool. What's your take? Should we trust exit polls or wait for the counting day?
Suyash, as you rightly mentioned, these are the samples. But look at the consensus in the numbers. The consensus numbers of these samples, the average coming at 350 for NDA, which gives the thumping majority, and there will be a policy continuity with respect to the government is concerned. So we can give importance to the exit polls, even though, as you mentioned, these are the samplings, but the consensus view is driving the market right now. There is no dichotomy in terms of the numbers are concerned. All the exit polls, the samples have been giving the thumping wind to the incumbent government. That's where the market is exuberant at this point of time. Where few days back, few weeks back, there is some kind of dichotomy and uncertainty with respect to the majority is concerned. Sometimes there is a dichotomy with respect to the India alliances gaining the momentum. But right now, it's clear that the NDA is coming, the incumbent government is coming with the thumping majority with respect to the consensus in the exit poll numbers are concerned.
Okay, Andrew, I want to bring you back in here. So, exit polls, of course, we've seen the data, but counting day, we are still a few hours away from really understanding how that part of the play is actually going to come into motion. So, let me run you through some data. If you remember, you know, 2004, when the Vajpayee-led government was expected to come back to power, and all the exit polls had pretty much predicted that it is going to be an NDA term, we actually saw a change of guard. And that is not something that the markets had taken very kindly to. Overall, on counting days, we've seen a massive decline in 2004. We have seen an increase of up to 17.7% in 2009, and then pretty much a flattish trading with some profit booking both in 2014 and 2019. How will today's data look tomorrow?
Well, I mean, as I said, there's quite a number of brokers' reports coming out showing that that the exit polls give you direction, but they underestimate the extent of that direction. So therefore, that's been extrapolated is that's going to be better figures for NDA. That's how the market's looking at it. Listen, I mean, we'll have to wait till tomorrow, but the one thing I would say is that the market was for reasons was feeling jittery before this election, and those have been allayed by these exit polls at least. And if tomorrow proves to be the case, then it's back to normal business, right? I mean, the event's over and we're back to the economy, global factors, the 100-day program, the budget. All of these factors then start to play in after that. And of course, we've got the RBI meeting as well, which I don't expect anything new from there, but again, it would be another kind of help for the market to kind of continue to move higher. And let's not forget the inclusion in the JP Morgan bond index, which should be being closed into the bond markets. All
right, so I think we are continuously hearing this 100-day agenda. If you were to, Andrew, make, let's say, a top 3 or top 5 priorities for the government of India for the first 100 days, assuming it is going to be an NDA government, what are those 5 critical areas, not specific to markets, but at a broader economic level, that the new Modi government 3.0 should really focus on?
Well, I think the manifesto says it all anyway. It's going to focus on obviously expenditure in defence, railways, infrastructure, tourism, PLIs into manufacturing, particularly in the electronics manufacturing sector. So you expect that's where you're going to see the kind of emphasis. And I think that could be followed up by the fact that there's been the government hasn't really been kind of spending recently, so you could see a number of orders start to be kind of put out into these sectors over the next few months, which again will kind of help those sectors and those companies in that, because order books usually, or order receipts usually means higher share prices. So that's what I think will help the market. But I still think that the market will be led by the banking sector, which is underperformed. And I think if we look at all of those money coming in terms of the bonds, you could see the bond yields continue to fall, and that's great for the banking sector in terms of obviously the capital gains they're making on their bond holdings.
Okay, we'll come to bonds in just a moment, Andrew, but picking up on what you just mentioned, I think the interim budget which was presented by Finance Minister Nirmala Sitharaman on the 1st of February has already set aside budgets for pretty much all of the focus areas that you spoke about. For example, infrastructure, we've got an 11 lakh crore rupee layout, 11.11 lakh crore rupees. On PLI, which includes electronics, auto components and many other 14 such sectors, we've got about 2 lakh crore rupees allocated. For India's own semiconductor mission, there is almost 76,000 crore rupees allocated. So while the capital allocation for these focus sectors is already in place, and in fact a Reuters report this morning also suggested that India will want to make policy tweaks, ease of doing business tweaks to rival China when it comes to manufacturing of real goods in India, because India's overall share of goods in the export market is just about 3%. So capital allocation schemes outlay is one side of the story, but then fiscal deficit also continues to be a problem. So in the budget, do you see some major tweakings on the taxation front where both corporates as well as the tax-paying citizens could be expected to shell out more money?
There's a few things there. One is, let's not forget the huge dividend the government's just been given by the RBI. Now they're in that great problem of to reduce the fiscal deficit or spend more. I don't think I've seen any reports or had any kind of negative views from foreign investors in terms of where the fiscal deficit's landing anyway. So it gives that government the flexibility to increase spending to kickstart the kind of animal spirits in the private capex to start picking up. So I'm a little less worried there. In terms of taxation, I mean, obviously, there has been a lot of talk about potential increase in capital gains tax. We certainly think that the arbitrage funds taxation could change, because there's a big dichotomy there between equity tax versus bond tax, and the banks are really needing to get the fixed deposits higher. So you could see something there. It depends on whether you have an income tax reduction for everyone, along with some change in maybe duration for capital gains tax on long term, or maybe they'll tweak along the short-term capital gains tax. It's difficult to kind of work on that on what exactly they'll do, but there could be some changes.
All right, and to add to Andrew's point, this mega gift that the government
RBI has
got
given,
from
yeah.
RBI,
The bonanza.
The bonanza. I think it's certainly going to benefit the public sector banks more, because it's something called mark-to-market gains that they can rake in from that, and we are seeing in the performance of it. But I want to shift gears now and move on to foreign institutional investors.
Sure.
And Kranthi, I'll come to you on this. FIIs, at least in the equity segment, they were net sellers in 24. In the first 5 months, they've pulled out close to 1,25,000 crore from the cash segment of the Indian market. But at the same time, sir, they have been pumping in money in the debt segment. Now, tomorrow, after this big binary event is out of the way and uncertainty is out of the way, do you see some reallocation from debt to equity, or do you think that will not be the case, since the inclusion in the JP Morgan bond index and the Bloomberg bond index is right around the corner?
Suyash, as you rightly mentioned, FIs have been sideways due to the policy continuity, and also FIs have been some kind of hot money has been getting allocated to other emerging markets. But the long only money has been chasing Indian markets at this point of time. What we can sense at this point of time, there will be incremental allocation towards the Indian market. And as the growth getting improved over a period of time, we can see further reallocation towards the Indian markets. That's what we can sense going ahead. been sideways the last couple of months, but we can see.
Right, Kranthi, I think there's some network issue with that. We'll come back to you, Kranthi, but Andrew is still with us. Andrew, I think on a day like today, it's absolutely prudent to also discuss certain very, very specific, if not stocks, at least conglomerates. And one of those happens to be the Adani Group. And of course, we've seen the kind of recovery that the Adani Group has made post the Hindenburg allegations all through the last year and about a quarter or so on. And then, there's also a list of CLSA, which includes Modi stocks, and the Adani group of stocks sort of, finds its mention there. In addition to that, today's news also this morning suggests that the Gautam Adani has in fact overtaken Mukesh Ambani to become the richest, not just Indian, but the richest Asian. How do you see the movement in Adani stocks? And as an investor, would you bet on these 10 listed stocks from the Adani stable?
I honestly can't talk on individual stocks or names in that, but I did see that CLSA report. It's very interesting, actually, in the kind of analysis they've done. I would, whilst I'm not arguing that those stocks won't continue to move higher, they absolutely will, because they're in the sectors which, we know there's going to be a lot of government emphasis. So, that really kind of, continues to give them a, higher rating or higher weightage in people's portfolios going forward as well. So I think that's, again, that continuity part comes back to these stocks. I think those were highlighted as stocks as probably if there was something changed in terms of the exit polls, then obviously these stocks would be under pressure too. So you can just reverse that kind of thinking. And I think, the sectors that you have to look at are some of the sectors which we talked about before, in the hotels, airlines, premiumization within the FMCG business, but mainly in terms of beverages. These are areas as well which you'll see huge growth, was at the very beginning of the runway for a lot of these companies in terms of their onward growth. So those I wouldn't say are favoured. Modi stocks from the CLSA report, but obviously as sectors, you'll start to see those becoming more to the forefront. So it's very easy to say it's a favoured, kind of a government stock, but I don't see it that way. It's really the prospects for those companies within those sectors which are seeing a big upturn in kind of revenue and growth and earnings.
Okay, so while we are, go ahead, Suyash.
So basically, to what Andrew was also saying, there is certainly exuberance regarding Adani Group of stocks, and most of these stocks have recovered from the, the lowest point when that Hindenburg saga entirely took place. Right. And in the financial circles, Kartik, I was reading, there is this sentiment going around. If Modi goes 400 par, Adani Enterprises also could go 4,000 par.
4,000 par.
And we are around that mark, just about 3% away from it.
Yeah,
Let's see what happens tomorrow.
Absolutely. But talking sector specifically, Andrew, not great news coming from the auto sector. In fact, for once, after a 3-year bull run, so to speak, on car sales, we are seeing some sort of a correction or some sort of a slowdown in the auto space. So, do you think the auto sector has lived past its glory and now we're going to see some sort of a correction when it comes to auto stocks, as well as, which is a direct function of the car sales, or is this a minor blip and you see the sector reviving again around festive season?
No, I think it's probably a blip. I don't see it as being a long-term kind of fall in car sales. Perhaps most people have been trying to buy air conditioners, so it's so hot these days. Who wants to walk around a car showroom? So I think it's more of a blip. The way I've been playing the auto sector, to be honest, is not really in the auto sector, the companies themselves. It's really in the component suppliers, because I think that's where you're going to get. It's difficult to say who's going to be the EV winner in India, right? In each of the companies, each have their own kind of strategy and so forth. But what I do know is that the component players are going to be the ones who are supplying the components to these companies, both for EV and traditional vehicles as well. So I'm playing that side of it rather than I'm looking at the auto sector at the moment. I think a lot will depend on some of the new vehicle introductions over the next 2 to 3 months. There's a few companies out there which are introducing, even new motorbikes or new cars. I think those are the ones that'll probably do well. So it's a bit of rotation in the auto sector, as you probably noticed over the last few months. and I think that will continue.
All right, and once this election event gets out of the way, we also have a big event coming this week as well. The RBI policy decision comes out on June
5th to
7th.
7th of June
and,
is the MPC, yeah.
Andrew, coming to the data that's coming out from India, I mean, the macroeconomic situation looks really, really good. GDP data, again, was super strong at 8.2% for both, for the financial year 2024, much ahead of the expectations of market and the analysts. Do you see a surprise rate cut perhaps, sir, this time around? Maybe another gift to the investors out there, because again, inflation is coming off nicely, economy continues to do well. On the other side, there is another argument that after this big mega bonanza, so to say, 2.1 lakh crore gift from RBI to the government, the bond prices surged up and the yields came down, which reduced the spread between, the 10-year bond yields, let's say in the US and India. And for an investor, a foreign institutional investor to come to Indian markets in favor of US, which is, considered a virtually risk-free market, is the country risk premium enough now, sir? Could that hold back RBI from going for an interest rate cut?
It's one of the potential reasons. It's a very good reason, and I'm not going to try and counter argue. I think it's very, very reasonable thinking. I think the fact is that the RBI, we all know, has done a great job, right? So they're kind of sitting pretty. They're giving the government a dividend. They've got flows coming in through bonds, so that will help liquidity generally. And they can sit and wait to see what the Fed does if they want. I mean, yes, they do have that ability if they want to do it. But I think there's probably no hurry at the moment, given some of the global factors that are still out there. That they can bide their time. The growth is still there in the economy, and it doesn't look as though it's going to slow very quickly anyway. So I suspect they'll just sit on their hands and say the right things.
Kranthi, I think Kranthi is back with us, and we have been talking about how the market is exuberant. They are celebrating what could perhaps be a historic win for the incumbent government. But again, Kranthi, the question really comes. We were discussing foreign institutional investors right before you left. The question really is, what market is at the end of cheaper in that sense, because FII positioning, as we have spoken about earlier, is more tactical and strategic in nature, and China, for that matter, sir, is trading at a price to earnings of about 10, whereas we are trading at a price to earnings of about 25, more than twice as expensive as China. Do you think that could also perhaps keep FIIs on the sidelines?
So, yeah, with respect to the long-term growth and the transparency and the quality of companies, what Indian market offers, and also the manufacturing drive, what the government is looking at this point of time, and make India as one of the key manufacturing hub in the world. These are the factors that are going to drive Indian market. Of course, as you rightly mentioned, the valuations are not cheap, but the growth prospects in India and the demographic dividends and policy continuity is quite strong with respect to Indian markets. And Indian markets and companies maintains a high standard of transparency and the quality. So when anyone compare these factors, Indian market looks an attractive destination on a longer term basis. So these are the factors that will make Indian markets attractive for the foreign portfolio investors. But some kind of money can be allocated towards going towards China's market is concerned. But the long only money and the FPIs who are betting on India, they continue to allocate higher amount with respect to Indian market is concerned.
Okay, so these are, what the foreigners are looking at India and the lens through which they are looking at India. But Andrew and Kranthi, stay with us. Yesterday, we also had a chance to speak to Feroz Aziz, Deputy CEO of Anand Rathi. And in fact, his real big statement that came out of our interaction yesterday was that Nifty is likely to double in the next 5 years. And that doubling is actually going to happen through the power of SIPs and mutual funds. Let's listen into that chunk and then come back to you for your reactions.
Somebody has kept some money as cash, liquid cash, to get into an election. I personally think that's not going to be more than 10% of one's wealth. The larger question is what to do with the 90. If your asset allocation in the 90 is not great, then this 1 lakh will not do the trick. India has only 3.2% of the total household savings in mutual fund. And in direct equity, individual holding is 3.2% out of the 800 lakh crores. So most people miss the larger picture. So firstly, if you're not going to be invested 60, 70, 80% in equity for your long-term monies over the next 5 years, I think you're being significantly pessimistic for a situation for a country like this. One. So point one, at least 70-80% of your money should be in equity. If it's already 80% in equity, then the 1 lakh again can go into equity as long as it's 5-year plus money. That's point one. Point two, what are the sectors which will do well? Of course, those are usual suspects. Defense, we're going to be spending 6.5, 7 lakh crores on defense. We're going to spend 2.8 lakh crores on railways and railways is 2.5 lakh crores. Road and highways, we are spending about 2.7, 2.8 lakh crores, the kind of infrastructure spending with the tax collection going up. We grew our direct tax collection by 19.7% on a back of 21%. Again, so if these are the kind of tax collections which are going to happening, the infrastructure spending, especially for these sectors which I read out, railways, roads and defense, is going to go up. Now, is that already priced in is the second question. But if you came to mutual fund platform, I don't think the next 5 years needs you to do direct equity at all. Because if things are good, you can use a mutual fund platform. If the broader market is not going to do good, then you have to get into direct equity, buy those 5 stocks and do a lot of research. I think this 5-year era is a mutual fund era. Because direct equity does not, we have so many direct equity clients, they don't beat 20%. We compare them with Nifty on an alpha basis, which brokers don't. Most 92% of them underperform their the mutual fund peers. So point one, have 80% in equity. That's the first piece of recommendation. If you have money sitting outside to deploy it on Monday. Of course, the actual elections could throw up a different result, but I think as long as the government continues with 280, 300, whatever that number be, there could be a short-term blip if it's not as expected as 350, 370 as per the exit polls. But I am reasonably clear that the government will be formed, irrespective of whatever the total comes to. So put your money on Monday. That's what I would do. And 3 sectors which I read out. Take 3-4 mutual funds. They'll give you those 16, 17, 18% also for a 5-year holding, because I think Nifty can double in the next 5 years.
All right, Nifty can double in the next 5 years. Put your money on a Monday, and that is exactly what seemed to have happened on Monday morning. Andrew, is mutual funds the route, or like Feroz was mentioning, maybe, don't waste time picking up those 5 stocks and doing so much research, and put your money equity oriented but in mutual funds?
I mean, obviously, the bulk of your investment should be through mutual funds, because unless you've got the time and the inclination, it's a lot of work to kind of follow stocks and look into all the details. But I still think if a lot of mutual funds will not have an exposure to some of the trends that are happening in the economy. So, for example, if you think the hotel sector or airline sector, it would form a very small percentage of a mutual fund. So, therefore, you might want to look at some individual stocks, where you feel that there's a long runway, like electronic manufacturing, which we mentioned before. So, these are the kind of areas where I think you can't get that kind of exposure in a mutual fund to some of the themes that will play out within India. Some of them you can, obviously, and like capital goods and so forth. But I would have thought individual stocks should also make up some part of the portfolio, where you think there's a big theme that's going to play out.